Managing Director of IRB Infra. Mr. Mhaiskar, congratulations. India's first InvIT has listed and it looks like it's a decent listing as well. Now that the listing is done, you can take us through what the future looks like. Our analyst was just talking about traffic growth of around 6 to 10% that the street is expecting. But you tell us, what do you expect going ahead?
A very good morning. Yes, it is indeed a very big, proud moment for all of us at IRB as this first infrastructure investment trust gets listed. It has been a phenomenal journey, and the underlying projects is the core strength of this trust, as you rightly said. And with 6 projects garnering an EBITDA of 700 crores, I am sure it will give a good amount of confidence to the unit holders who have taken the leap of faith and invested in this product. So the traffic and inflation assumptions based on which this whole model is built is penciling in somewhere close to a 9.5% revenue growth and a 12% kind of a yield that we believe should be possible.
Good morning, Mr. Mhaiskar, and congratulations again. At 9.5% increase in revenue, how much is inflation and how much is revenue?
We are factoring in the inflation. When I say it is on account of the tariff movement that we expect. So volume growth that we have envisaged is around 5.5%. And inflation targeting is around 4.5%. But we have to keep in mind that 3% is going to be a fixed tariff increase in half of the project. So the impact of inflation per se is likely to be much lower. So that is how the 9.5% revenue growth is expected to come in.
That exactly was what I wanted to know. How are you allowed to inflate the tolls? 3% is fixed. So what does the balance depend on? How much more can you increase the tolls?
So 3% fixed element and 40% correlation to inflation is how the overall tariff structure works out. And then the volume growth together should, one can expect a 9.5% revenue growth is what we believe in.
Volume growth of 5.5, what has been the historical volume growth? And is this 5.5 more than what you did in the last 5 years, say?
No, in fact, I would say this is a very moderate assumption, because if you look at the existing set of projects and their deliverables in the past few years, you will notice that they have given around 6 to 8% volume growth. So this is a very moderate assumption that we are working on, and there is a good scope for the projects to actually deliver more than better assumptions that we have taken.
Okay, Virendra, good morning. So as of now you have 6 assets under the portfolio. Going forward, would that increase?
Yes, there is a right of first refusal that IRB has given to the trust. So all the projects in the IRB portfolio, which is almost 2x size what IRB is developing at this point compared to what we have transferred to the trust, those will be the projects which on which the trust would have a right of first refusal. And as these projects become operational and stabilized, they would be made available to the trust. And subject to the unit holders' approval, these projects can also be bought by the trust. So yes, there is a healthy pipeline of projects that will be made available to the trust.
Okay, now, you mentioned that, I just wanted to come back to that earlier point about the EBITDA. You mentioned that these 6 projects will garner an EBITDA of 700 crores going ahead, right? That compares to about 850 crores in FY16 and about 750 crores the year before. So are you trying to say that compared to FY16, in the next few years, the EBITDA could be a bit lower?
No. I am saying EBITDA post-tax. So probably you are looking at the pure EBITDA. We are saying this is the distributable EBITDA to the unit holders post-tax and post-revenue share to NHAI. So a kind of a PAT cash, which we are talking about, which will be available for distribution to the unit holders. So that we are saying will be in the range of 700 crores, considering the numbers where they stack up today.
IRB makes 1700 crores from this?
That's correct. So the 5,000 crores that we have raised, around 3,350 crores will be utilized towards repayment of the underlying asset debt, and the balance 1,700 odd crores will go back to the sponsors and will help reduce the leveraging at the IRB end as well. So at the IRB end, the leveraging will go down from almost 3:1 where it stands today to almost 1.8:1. So there will be a significant reduction in the debt at the IRB end.
Oh, absolutely. So how does this progress? You said that there is a right of refusal for transferring future projects as well. I would assume that if you gave a yield like this, they will not refuse it, and they will in fact include those include those assets in the InvIT. In that case, how do you see your debt to equity ratio progressing, say FY18, FY19?
I think, yeah. So I think what happens with the listing of the trust is a new vehicle and a complete ecosystem now comes into play, where IRB, as we coin it, BEST, best. So what happens now is IRB will bid for projects, execute them, stabilize them, and then offer it or transfer it to the trust. So without depending on capital raising, IRB will be able to take the execution risks, develop projects, and then unlock the value by transferring it to the trust. So going forward, I don't see a necessity for the leverage in IRB to go up beyond a particular point, depending on how many projects we are developing at one point in time. But we will have an opportunity to keep unlocking value as we go forward. And that would keep the debt equity at all times to come in a very, very decent range.
Okay, so what will, you said the debt equity will be at 1.8:1, but what will be the maximum absolute debt exposure post this issuance?
Maximum debt exposure today will be close to 12,000 crores post this transaction.
Okay.
At the moment.
All right. And by the end of the year, you expect it to come to?
See, as I said, as you develop new projects, you will draw new loans to develop those projects, and you will keep selling assets. So it will be a factor of how many new projects you develop in a particular year and how many of them you sell in that year.
Fair enough.
So it will be a function of that, but we now have a pool where we can unlock the value and keep growing without leveraging beyond a particular point.
Point taken. Thank you very much, Mr. Mhaiskar, for joining us with all those